Is the Lincoln property market running out of steam? In recent articles on the Lincoln property market, I have been talking a lot about house prices over the last 12 months and the longer period of 5 years in Lincoln. When it comes to the newspapers talking about the property market, the headline most people look at is what is happening to national house prices. However, as 2 in 3, 65.1%, of Lincoln home sellers are also home buyers, the price is almost irrelevant. Please let me explain. If your property has gone down in value, the one you want to buy has most probably also gone down in value. So you are no better or worse off, and if you are moving up market, which most people do when they move home, in a suppressed property market the gap between what yours is worth and what you will buy gets lower, meaning you will be better off. Many property commentators, including myself, consider a better measure of the health of the property market is the transaction numbers, i.e. the number of people selling and buying. Let's take a look at the numbers for Lincoln. The average number of properties sold in January, February, and March, between 2008 and 2020 was 110 properties per month, whilst the same period in 2021 we saw 124 properties sell on average per month. This was boosted by the March statistics where an eye-watering 149 homes sold. This meant 12.4% more houses sold in the Lincoln area in Q1 2021 than the 14-year average. The average number of properties sold in April, May, and June between 2008 and 2020 was 121 properties per month, whilst the same period in 2021 saw only 93 properties sell on average per month, meaning 23.6% less houses sold in the Lincoln area in Q2 2021 than the 14-year average. Finally, whilst the exact statistics for Q3 2021 for our local authority won't be published by the Land Registry for a couple of months, I can make certain calculated assumptions from the national data published by HMRC. The number of property sales for our local authority area in July, August, and September between 2008 and 2020 was on average 129 properties per month. However, using the HMRC data, I calculate there will only be 93 properties sold on average per month in Q3 2021. This means 27.9% less houses sold in the Lincoln area in Q3 2021 than the 14-year average. One of the two main drivers of activity in the housing market in the latter half of 2020 was the battle for space, with many Lincoln buyers seeking larger properties to work from home. The second was the short-lived tax relief measures such as the cut to stamp duty tax, meaning property prices were at an all-time high. But what also might surprise you is the number of people buying for the first time. 1 in 4 mortgages since lockdown have been for first-time buyers, or exactly 25.12%. Lincoln first-time buyers, buoyed by parental help with their deposits, the government's 5% deposit mortgage and ultra-low borrowing costs, have also helped to push house price growth since the start of 2021. In fact, if you split down house price growth between second-time buyers and first-time buyers, the national annual house price inflation for first-time buyers is 9.2% compared to 8.1% for the second or third-time buyers. Yet, the Q2 and Q3 2021 Lincoln property market was worse than the long-term Lincoln average in terms of property transactions. The question is, should we be worried? The UK economy continues to deliver a benevolent framework to the British housing market. The labour market has outstripped expectations, with the millions expected to join the dole queue at the end of furlough failing to materialise, and with the number of job vacancies on the rise. Of course, and I mentioned a lot in my recent posts, the Bank of England is projected to increase interest rates to dampen inflation in the coming months, with further small rises predicted over 2022, so I do expect the demand for property to cool off as mortgage borrowing costs increase. Normally such rises in mortgage costs would mean less property would sell, yet nothing over the last couple of years has been normal. Many Lincoln property homeowners have held back putting their property on the market in the last 6 months because they were afraid they would sell their own home but not find another to buy, thus making them homeless. But nothing could be further from the truth, yet that is what a lot of people incorrectly believe. If the Lincoln property market slows and interest rates rise, mortgage costs will still be very low by historical standards. Also, if the obstacle of raising the 5% deposit can be overcome by first-time buyers plus a confidence that existing homeowners won't be made homeless because of a cooling property market, many more people could be tempted to enter the property market by placing their property for sale first, thus opening up the market to more buyers, which in turn will drive up transaction numbers back to their normal 14-year average. However, raising a deposit is likely to remain the primary obstacle for many. If you are a Lincoln homeowner or first-time buyer and want my thoughts on the future, then please do drop me a line. 2022 is going to be an interesting year ahead for the Lincoln property market. Only time will tell if this will be a brief respite or is it running out of steam? Please tell me your thoughts on what you think will happen.